All right, Gene. Thanks for being on here with me and taking some time out of your busy schedule. I know you're a busy guy and appreciate you being on here to talk about some tax tips and strategies for real estate owners, investors, and also those that are self-employed and, specifically to our realtor friends, our friends that are real estate agents that get these videos. It's fourth quarter. So a lot of people are looking at what are some last minute things or last quarter type things that we can do to improve our tax position, to not have to pay as much to Uncle Sam, so to speak. But first, as we get into this discussion, I'd love to have you just introduce yourself briefly to those that will be watching this, and so they can get to know you a little bit and what you do.
Oh yeah, my pleasure. So I'm Gene Bott, as you mentioned, with Wasatch CPA Services. I'm a tax strategist, is how I like to call myself. I just basically look at high-end tax planning strategies. The goal is to help small business owners recognize the kind of savings that you typically hear of in the big corporate environment. That's my goal.
Awesome. And one of the things that, you've been our accountant for a little over a year or nearly a year. And, we had a different tax planner or accountant for several years. And one of the things I was instantly impressed with you was just how, connected you are with the most recent tax changes and strategies, and you mastermind with various accountants across the country. Is that right? You're part of different groups where you're always wanting to stay on the cutting edge of different things that are happening.
That's right. Yeah, it's a pretty good sized community, and we get together at least once a week to talk tax strategies and just tax strategies. You won't find many nerds like me that'll talk tax strategies just for the fun of it once a week.
Well, as a business owner and real estate investor and everything, we appreciate people like you that really get a kick out of saving us money. So that's awesome. We appreciate it. So let's dive in now. So we're going to talk about this, year-end tax planning strategy. And what are some things that we can do as, real estate investors, business owners, self-employed real estate agents that can really move the needle for us come, end of year as we're filing our taxes early this next year?
So that's an excellent question. The real estate arena is an incredibly unique arena. You have strategies that you have to plan for in advance and strategies you can implement right here at the end of the gate. One of the ones you can do pretty easily here at the end of the year is the Augusta Strategy, which I absolutely love. But be very careful as you're looking into that. Make sure that you're doing it right. If you do it wrong, it will get you in trouble. But it's a fantastic strategy that works for anybody that has an income.
So I remember when you first brought up to me the Augusta Strategy, and obviously I didn't really know too well what it was. And as you started describing, I thought, okay, is this legit? Like, is this a loophole that is borderline, unethical, illegal? I've had people kind of in the past share some things like, oh, don't do this. But, you convinced me otherwise, that this is an actual tax code. And so let's explain a little bit more what that is.
Yeah. So it came about through the Augusta golf tournament. What would happen is people would come down to watch the golf tournament. And so those who lived in the area and didn't really care, they would just vacate their home and rent it out during the golf tournament to people. And then they would go and report their taxes at the end of the year and would not report that income on their tax return. The IRS caught wind of that, and they were not very happy about it. So they started suing these people. And in every single case where it was documented correctly and they upheld the tax code, the taxpayer won against the IRS. And that's because the tax code has a legitimate loophole in there that is totally and completely legal, that allows you to rent your property within those certain guidelines and not pay the taxes on the income from it. So what came out of that is tax planners like me got together, started talking and saying, hey, how can we make this work for our clients? Well, if you can rent your home for a certain number of days, why not start using it for business events and start renting it for that? And that allowed us to find a way to do a legitimate business deduction for the use of the home for an actual business event up to the limits that they allow, and actually claim that income as a deduction without having it as taxable income on their personal side. It's a fantastic strategy, totally legal. And as long as you play by the IRS rules, you will not get in trouble. The IRS has lost every case they've tried to fight it.
Yeah, so I can, as a business owner or self-employed real estate agent, whatever it is, I can rent essentially for maybe a monthly board meeting or whatever it is, or ownership meeting. Especially like in my case, I own an S corp, and so I'm required to actually have regular business meetings and board meetings, so to speak. And I can do those in my home. I can pay from the business to ourselves personally in our home, whatever that going rate would be for that space. Essentially, is that a simple? Is that a fair explanation of what that is?
Yes, that is totally fair explanation. And the thing that's fantastic about it is when you talk tax strategies, you've got the tax advantage strategies that people always hear about, and you've got the tax deferred strategies. And there are very few that are actually tax exempt strategies. And this is one of those very few tax exempt strategies, meaning the income will never be taxed.
Now, what about to change gears a little bit, because we won't be able to go into all the details of the Augusta Strategy, because that's awesome. But I think there's a lot of people too, real estate agents, for example, or even investors that don't have an LLC, or they don't have an S corp, or they don't have a business entity. Is that something that you'd suggest they change right away?
Absolutely. If you're getting a 1099 at all, you should have at a minimum an LLC. And the reason for that is because of the legal liability that it helps separate, and the fact that it sets you up for tax planning. One of the biggest mistakes people make is starting to get a 1099 income, collecting $20,000 a year on a 1099, and you don't set up a business. Well, then when it comes tax planning time and you want to set up that business, the IRS comes in and says, no, look at the income you've had all this time. That doesn't make any sense. And now you're doing this business and claiming these strategies. And they lose out on a couple of strategies because of that. And it's not just for a 1099 either. It's any sort of income you've got that's business related. You really should have at a minimum an LLC. Preferably, though, you're talking with your lawyer and your tax guy and kind of making sure that you've got the right entities set up.
Yeah, because not only do you pay taxes on the income earned, but you can be double taxed, right, with the self-employment tax. I know that there's business deductions that we take advantage of by having the business, and so yeah, definitely. What other ways can we move the needle come year end as we're looking at fourth quarter here?
So some of the really ones I don't really want to go into a lot of detail on, partially because I'm not the expert that talks about them. Meaning I can do the tax planning side, but I can't actually set these up. Would be retirement plans, maybe estates and trusts. So if you're doing retirement plans, we need to bring in a financial planner to talk with you. I can help walk you through some of the tax benefits of it, but I will get into trouble if I start actually selling those kind of things, and I can't do it.
Sure.
Law is the same way, where I can walk you through the tax benefits of the estates and trusts any day of the week. However, I can't actually write them because I'm not a lawyer and didn't sit for the bar. But these are some fantastic strategies that, as long as you get them in place relatively quickly, you're sitting pretty. So with the retirement plans, you can contribute to retirement plans all the way up to April 15th, or if you file an extension, all the way up to October 15th. Estates and trusts, you can go all the way to December 31st. However, there are deadlines for when the accounts need set up. So if you don't have them set up, you need to. Now, going back into the IRA or the retirement account world, for real estate professionals, a very popular one is a self-directed IRA that allows you to take advantage of the retirement world while still allowing you to invest in the real estate you want. When I bring that up, though, I do want to throw out the caution. The self-directed IRA is easily one of the most complicated tax strategies out there. meaning it is really easy to get yourself into trouble by doing something wrong. So if that sounds appealing to you, doing something where you can invest in retirement and then still buy the real estate that you want with those retirement funds, make sure you're working with a professional. Do not do it yourself. It will get you in trouble, I promise you.
Good tip. Yeah.
Yeah. Some other really fast ones is making sure that you've got all the documents you need for personal expenses like cell phone, mileage deduction, all those kind of things. That are personal expenses, but you use them for the business and can claim them. So make sure you're tracking down all those things. Mileage in particular, you have to have a mileage record in order to claim it. If you don't have one, you cannot claim it, or you can get yourself into trouble with the IRS. So make sure you put something together, preferably a mileage tracker like Mile IQ or Everlance or some mileage tracker like that.
Yeah, I've started using Everlance. It works really easily. It's very simple, and yeah, it's great. Question for you: If I own a property out of state, and let's say it's in a state that I want to go visit because I have relatives there or I have family there, can that be a business expense for me if I'm flying out there and say I pay a visit to the property or something like that? How can I take advantage of that as a write-off?
That's an excellent question. That yes, it can be a write-off. However, there are limits on how you do have to do it, as you're clearly you got the sense there, I can tell. If the bulk of the trip is really related to that business activity, you can claim it as a write-off. Meaning if you go out there for a full week and you go visit the property for a day of that week, then you're going to have to take that and split it and be like, all right, 1/5 of my time was related to the expenses, so I can claim 1/5 of the travel and all the expenses related to that. If you go for like an hour, you probably shouldn't claim it at all. But if you go out there and you spend like 3 days out there fixing that property, doing some maintenance and stuff like that, basically 80% or more of your time, you can legitimately claim that the full trip as an expense. And
it just needs to be, go ahead.
When I'm saying 80% of your time, I'm meaning like working hours. So if you're 8 to 5 and you're there 3 days out of 5, you're good. And then you can take the nights and do your own little thing, of course, but working hours.
It needs to be a fair allocation of the purpose of your trip and visit. Okay.
Right.
If we have questions, we'll reach out to you. I'll have your contact information in the email that's going out and everything like that. So I'm sure for many of us, it's like, wow, what else? Like, what else can we do? If there's anything that anyone's learned that's new on here, any new strategies, it is enlightening when you have someone who is staying up to date, staying educated on all things tax and looking and striving to save us money. It's an awesome thing. So again, Gene, thanks so much for your time. Appreciate you.
You bet. My pleasure.